In the next 2 minutes, that's 4. In the next 2 minutes, you're gonna learn about the difference between ETFs and mutual funds. ETFs are exchange traded funds. Mutual funds don't have a cool acronym, but I suppose you can say MFs. Knowing the difference between the two can be crucial in determining your long-term investing strategy. Before we break down the differences between the two, we're going to talk about what they have in common. Now, both of them are a combination of stocks. So Disney, Apple, Netflix, you name it, there's ETFs that have those in it, and there's mutual funds that have those in it. Both have expense ratios. They have managers, and those managers buy and sell stocks inside of it. For that work that they do for you, you just pay them that expense ratio. Both of them also track the index. So mutual funds, for some reason, are the ones that are called index funds, while an ETF that tracks the same index is just called an ETF. In the next 5 seconds, you're going to try to skip this ad. By the end of that sentence, you realize this is not an ad. In fact, this video is not monetized. None of this is. I'm interrupting everything just to tell you that I understand that these concepts are a little bit more difficult than my typical video. That's why I'm putting up this pop-up right here. It's an index fund video. If you watch that and come back here, things will make a lot more sense. Hey, welcome back. Both allow for dividend investing, so if you do like dividends, there's ETFs with dividends and there's mutual funds with dividends. Please make sure to click the button that says reinvest dividends, and make sure you click that like button too. Without putting in any more work while you're sleeping, cash payout dividend or buying more of that ETF or more of that mutual fund. Now let's talk about the differences. An ETF, it locks in the price that you see it for the minute that you see it for. So if at $8.59 the ETF is $100, you push buy, that's how much it's going to be. ETFs trade throughout the day. So during the day, you buy it at $8.59, you sell it at $9.59. You can do that with an ETF. Mutual funds, on the other hand, or MFs. MFs trade at the end of the trading day, which means it locks in the price at the end of the day. So if you see something amazing, wonderful happening during... Additionally, with a mutual fund, you can usually put in whatever price you want for it. If a share is $100, but you want to put $102, it's going to buy you $102 worth of that share. You have $20, it's going to buy you $20 worth of that share. Because of this, many brokers allow you to automate mutual funds. This means that without logging in and clicking buy, it does it automatically for you. Charles Schwab, for example, if you type in SWPPX, that's the S&P 500 index, if you can just automate at least $100, it will let you do that. Vanguard, on the other hand, at least $3,000 to begin automating. I don't think that's fair. Vanguard, please get your act together.
Oh, they stealing! They stealing! Oh. Oh.
Charles Schwab, $100. I mean, you're almost there. Now remember, when it comes to mutual funds, you can still buy however much of it you want. You just won't be able to automate it. So if you have $20, you can still buy $20 worth of the mutual fund. Now that you know the difference between the two, drop a like and subscribe. And click this video about index investing, because I know you haven't yet, and you really need to know this stuff. This is how revolutions happen.